Alright everyone, Cowboy Trades here, welcome back to the channel for another update. So the CPI data just came out, headline inflation dropped to lower than market expectations. Does this change the outlook for Bitcoin and the SP 500? How am I going to be trading these markets and how can we profit from this market volatility? Let's find out in the charts, but before we do that, let's discuss the economic data that came in. Headline inflation year over year dropped to 4.9% in the month of April. Consensus was at 5%, and the previous month was coming in at 5%, so a drop, but not too much of a big drop. Also, US core CPI year over year fell to 5.5% in April. This was just in line with consensus, and just like headline inflation, only dropping a measly 0.1%. In terms of the actual CPI index, this is the major CPI index, not the year over year one. This has actually increased to a new all-time high in the month of April, rising to 303.363. Now, we haven't had the update on sticky inflation yet. This actually gets released at 11 a.m. Eastern time. So in about an hour and a half, I'll post the details of this over on my Twitter. So make sure to follow me at 618_cowboy. Although just like headline and core inflation, sticky CPI is probably estimated to drop about 0.1%, meaning that it would be at the exact same valuation as it was 7 months ago. So inflation is still remaining rather sticky, although the markets have been rallying in the immediate short term because of this news. So in terms of does this change anything in the higher time frames? Well, as we've been discussing on the channel, the other day we made a Bitcoin and S&P 500 video, 23-minute long videos over here, 18-minute videos long over here, and obviously we are still down tremendously in the past week or so. So in the higher time frames, if you've watched these videos, you know my thoughts on the macro analysis. Be sure to check these out if you haven't already. So as you can see, just quickly updating Bitcoin in the S&P 500 macro, we're still in the exact same boxes that we've been detailing before. This was a massive area of previous support throughout the distribution phase at the top of the bull run, and we're obviously retesting this right now. If we come over to the daily time frame, we broke underneath this about a few days ago. You can see we are still majorly down since these most recent macro updates in the past week. We are basically pushing up and retesting the lower bound at 28,000 for Bitcoin right now. In terms of the S&P 500, we're still kind of detailing the same chart. We have actually had a bullish close above the asymmetrical triangle. So if you're just looking at this from a purely technical perspective, in terms of the asymmetrical triangle, this would lean more bullish than neutral. However, if you're incorporating the Elliott wave theory, we are still beneath wave C, so this would be leaning slightly bearish as long as we don't have a push above 4,193.95 for the S&P 500, then this Elliott wave theory still remains intact, and the most likely course is for, of course, us to proceed with this falling market and break to the downside of this asymmetrical triangle. If we do break to the upside of 4,195, that's obviously a different picture. We'll have to reanalyze the markets at which point and potentially be calling for slightly higher price targets. But at least as of right now, things in the macro remain unchanged for Bitcoin and the S&P 500. And in terms of Bitcoin in the slightly more mid time frames, if we're looking at this chart over on the daily, you can still see this beautiful head and shoulders is still developing for Bitcoin. We did bounce just above the neckline the other day, but more or less we are still within this exact same right shoulder with a neckline in the next few days coming in at 27,200. So keep your eyes on that. If we break to the downside of this, we'll be heading all the way down to CME gaps at 24,800, head and shoulders price targets at 23,400, potentially CME gaps at 20,300, and this massive BART pattern price target at 19,470. If the SPX manages to close above 4,195 and Bitcoin starts to take a face tear to the upside with the SPX, then we could, of course, reanalyze the markets and talk about the 36,000 CME gap, at least in the immediate short term. This is not my most likely case, and here's why. If we come over to our final chart, I'll be detailing how I'm going to be navigating this lower time frame CPI pump. What am I going to be doing with my trades? Let's discuss this. So, as we've been talking about on the channel, we've had this bearish reversal pattern signal. This is called a diamond top formation. You get the price target of this from drawing from the top of the diamond all the way down to the bottom of the diamond. And as you can see, quite quite recently, 3 days ago, we did have a bearish engulfing candle and a breakdown beneath this diamond top formation. Since then, we have had a push to the upside because of the CPI. As you can see, we haven't yet retested the breakdown of this diamond top formation. So in my opinion, I would absolutely love to see Bitcoin come up, close a daily candle beneath 28,600, and then get a confirmed rejection with volume coming into the markets to support this major crash to the downside. Now, we don't really have much bullish volume coming in for Bitcoin right now. Of course, we've only just had the CPI numbers, so we will have to see how this develops. Like I said, the trade is very hingent on when Bitcoin closes on the daily time frame. So what I'm going to be doing is I'm going to be waiting for the daily close for Bitcoin. If Bitcoin does manage to push up to 28,600 and close a daily candle beneath this, then I will be opening a trade. So do bear in mind, if you are going to be looking at this type of trade, you obviously don't want to set your short right now, because if we do manage to just blast above this and close a daily candle above 28,600, then we may have a very quick move back up to the upside because of this. So very hingent on how we close on the daily time frame. If Bitcoin pushes up, like I said, to 28,600 and closes a daily candle beneath this structure, then I will be looking at a short. So the short that I'm personally looking at is going to be taking profit at the price target of this diamond top formation. That is down here at $24,543, approximately at that level anyway. You can front run the market by a tiny bit if you want on that target. And my stop loss is going to be just up here at 30,577. This is basically not quite the top of this structure, but it is above these wicks over here. It's just above the breakout of the diamond top formation. So just in case something like this happens, then you won't of course be getting liquidated on that. This is really looking at the wicks all the way up the top here, multiple rejections. So if we do manage to have something like an SFP pattern, a failed move equals a fast move in the opposite direction, it could set up something like this. So as you can see, stop loss up here at 30,577 approximately, and then the take profit down here approximately at 24,540. This is just over a 2-to-1 risk to reward ratio. It's actually a 2.8 risk to reward. So this is how I'm looking at trading the markets following the CPI pump. Once again, do bear in mind, everything is very hingent on where Bitcoin closes the daily candle body close today. If we close beneath 28,600, it's game. If we close above it, then I will not be entering this trade. Like I said, not financial advice. This is just how I'm looking at the market and how I'm going to be planning on navigating it. So in the higher time frames, really for me, absolutely nothing has changed. In the lower time frames, we may be getting that confirmation and then entering this trade from a position of strength. So for today, my friends, that's all I've got. Make sure to come and follow me over on Twitter at 618_cowboy. I will be posting the sticky CPI numbers in the next hour or so. Also, of course, I do post the actual CPI numbers, both core and headline, and the CPI index as soon as it does come out in the markets. I've mentioned this many times before. Of course, it takes me time to post the CPI numbers. It takes me time to think about what I want to talk about, analyze the markets and trade. So if you do want the economic data as soon as it comes out, make sure to follow me over on Twitter. But that's all for today. If you enjoy my content, make sure to leave a like and a comment, share the videos with your friends. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. It's been your boy Cowboy Trades. I'm out. Peace.